So, you know the basics of investing, but now you actually want to start investing and you're wondering what strategy you should use to invest. There are two main types of investing: value investing and growth investing, which I'll be explaining in this video. I'm going to start with value investing. Value investing is when you invest in a stock because you think that it's underappreciated by the market, that it has a certain quality that the market isn't appreciating, which makes it a very good and cheap buy. Now, indicators of a good value investment, a good stock when you're value investing, are usually, for example, a very low PE ratio, which means that its earnings are very high in relation to its share price. And also, another good indicator of a good company to buy is that it has a very high net asset value in comparison to its market cap. Because these both show that there's an extraordinary amount of value that the market hasn't seen and understood. Usually, the reason value investments are selling at a very cheap ratio to these various things is because it's out of favor with the market. It could be because the general economy in its industry or area is down. So, for example, if industrials companies are going down, then even if your company is extraordinarily good, you'll still get the bad prices from the rest of the industrial companies, which is actually a very good thing if you're trying to invest in them. Or it could be that your company is going through some sort of turmoil where, for example, it's got some legal battle to fight. And these are usually a worse case because then they usually have to pay large amounts of legal fees and might have their business compromised by some sort of legal battle or something like that, or a controversy that might ruin the brand. Value investing is generally safer than other types of investing because there's known value in the company. For example, if you have a much higher net asset value than your market cap, which is the total number of shares times share price, then you can't lose because you're just buying the assets from and getting some money in return. So even if the whole company goes bust and they sell all their assets, you'll still make a profit. So generally, value investing is quite safe as long as you do your homework. We now move on to the second investment strategy, which is growth investing. This is when you invest in a company because you think there's going to be a lot of future growth. So for example, the company might be very small right now, but you see that they have a lot of potential to grow. An example of this can be like AI stocks, which are all the rave right now because everyone thinks they're going to be massive in the future when everyone's using AI. So, for example, that means that you're basically investing in a company because you think in the future they'll be earning a lot more revenue. So its share price is going to be higher and you're going to make a nice large profit. Things you need to consider when value investing is that usually these little stocks are very expensive in terms of their PE ratio and stuff like that, because a lot of people also think that it's going to grow in the future. And another thing you need to consider is its the amount of competition in the arena that the stock's in, because that will generally determine whether it might succeed in the future or not, and if it has a competitive advantage over that competition. Growth investing is generally very dangerous because you can't be sure that the company will succeed in the future because you have no real guarantees like a large amount of assets or anything like that to make sure you'll make a profit. But the reason people enjoy growth investing is because you can make an incredibly large profit, because that company will usually, if you succeed, grow exponentially in the future. So generally, people who invest in growth investing have a lot of money and can afford to make mistakes, because you generally will make a few mistakes for every success that you have, but those successes will usually pay for your mistakes. So in general, value investing is very risky, but it has a very high reward. Growth investing. Which one of these investment strategies do you think you'd prefer? And please do comment that down below so I can see. Anyway, if you enjoyed this video, please do consider liking and subscribing, because this is a very small channel. So every single thing you do helps out. Anyway, thanks for watching, and I'll see you next time. Bye.